Welcome to Charts Today. My name's David Linton, and today's edition for Wednesday, the 13th of March, comes to you from London. And looking at my screen this morning, same thing. We're seeing quite a lot of red on the Asian indices here and European indices, and the US market also fell back a bit last night as well. So market's just falling back a little bit. We've of course had the Brexit vote in the UK, so we'll look at what the implications of that are. Remembering that on my screen I've got my long-term picture, my weekly cloud chart, my 1% point and figure chart, my daily cloud chart, and my 0.5% point and figure chart, my 60-minute cloud, and the 0.1% 60-minute point and figure. There are video links below if you want to understand these. I'm actually giving the Society of Technical Analysts lecture at the London School of Economics tonight on Ichimoku clouds, but the presentation that you see below in the video link is basically that presentation, so you can learn the key points about using cloud charts. So this is my long-term picture, my medium-term picture, and my short-term picture. So the dollar is just bearish short term. We're falling away here, not dramatically, but we are falling away. Medium and long term, though, the dollar is still looking pretty bullish. The euro, therefore, is looking better on the short term chart, bullish against the dollar. Shortage of upside targets and these downside targets still hanging over us. So the euro still looks weak against the dollar, medium to long term. The yen, we're seeing the dollar just falling away here against the Japanese yen. Although it's down this morning, although we are looking to transition into a bullish trend on the medium-term chart. All we have to do sideways is to go sideways to do that, and you can bet your bottom dollar that a lot of Japanese traders are looking at this dollar-yen chart quite closely, because using Ichimoku charts, that's what they're going to be doing. So this is turning to medium-term bullish for the dollar. We've got upside targets as well, so dollar strength is still very much the theme, although we're seeing a short-term sell-off. Sterling is up this morning with the votes, and that's quite interesting. It's the politics of it is that delaying leaving or getting a vote that says that leaving no deal is not an option is starting to underpin this. So it's quite interesting to see that the implications are that the UK won't leave without a deal, and sterling is rising on the back of that. We fell away yesterday. We've got a lot of volatility. The market just trying to work out what this all means, and so all eyes on these votes over the coming days. Sterling looking stronger against the euro, against the Swiss franc also looking reasonably strong, and against the Aussie dollar also looking strong. Bitcoin was down 0.25% last night, just still flatlining. Bitcoin has done very, very little in the last few months. We just see here we're teetering along at around this 3,800 level with not much change. So no real action there. It's all about trading the range, really. Looking at the S&P 500 index, we were up yesterday, so we are seeing a slight improvement there, but just struggling short term to really break through there. The Nasdaq 100 also just looking a little bit better on the short-term chart now, but when we get to the Dow Jones index, we see that short-term we're still bearish there. And the Russell 2000 is also short-term bearish. The futures this morning, the S&P mini future is little changed, and the Nasdaq E-mini future up 0.1% flat. So at the moment, it's too hard to call which way the US market is going to open. The UK market is down very, very slightly this morning. Quite incredible, really, when you think about the fact that the Brexit deal was voted down last night, but it's having very little effect on the market. And the FTSE 250, the mid-caps, is down again very, very slightly, 0.04%. So not making any great changes there. Still bearish on the short-term chart. The DAX is down 0.13%. Still here, just hanging in short-term bearish territory. So no really big downside targets. So the markets really are a little bit in the doldrums, and we see here that the CAC 40 in Paris is actually holding on to its short-term bull trend. Japan was down 0.8% overnight, and the Hang Seng down 0.4%. China was down 1%, just unwinding yesterday's moves. China is on a little bit of a knife edge here, just trying to break through on the long-term chart. If we can activate these upside targets with a move higher, then that would be a sign that China's recovering. But at the moment, we've got to wait and see. The Indian market looking strong, powering ahead, up 0.6% overnight. India is still one of the best looking stock markets going, and the Aussie market was actually weaker, just entering some bearish territory here on the short term chart. Crude oil is up 0.3% this morning. More importantly, we're seeing this medium-term trend transitioning to bullish. We've got a target here of $70.60 for Brent crude on the short-term chart. That's activated. That's 5.5% higher. So it looks like, and the seasonal factors are strong for crude as well at the moment. Taking a look at WTI, we see we're pushing higher here as well. And US nat gas sitting in the doldrums at $2.77, not much action there. Gold has managed to break through $1,300, so that is looking stronger. We are just short of targets to the upside on these latest moves. We've got these targets to the upside on the longer term chart, but at the moment, this new upside target will be activated if we can move above it, and that would deactivate this downside target. So that's what we're really waiting for gold. Can we break higher than the February level that we saw at around 1350? If we do that, then we are looking very strong, and then we need to break this resistance that we saw in 2018. So keep an eye on the gold chart. The 1 minute charts will give you a bit of a heads up as well. Silver looking strong as well, in line with gold, so that's looking quite good. US 10-year yields still in the doldrums, sitting at 2.62%. It's hard to believe that we were at 3.2% only a few months ago. So 10-year yields in the US lower. We've got a new downside target of 2.47, so 2.5% yield is the downside target if we move to new lows and activate that. So, and we do actually have downside targets to, as low as 2.2 activated, and this one of below 2% not activated. But the chances of a move back to the levels that we saw at the financial crisis are not to be ignored. And looking at the German bond prices, German bonds are still reeling from last year's ECB announcement. We just haven't recovered from that, so looking short-term bearish there. Taking a look at the stocks. This data all coming from Thomson Reuters Icon. If you're a private user, Metastock Zenith, which gives you the same level of data as Reuters. Really, really powerful. If we look at the stocks themselves, here we're looking at the Yahoo Finance data, and it's a really powerful way of just looking at the markets, and available in all versions of Updata. Here we see how the major indices in the US, the S&P and the NASDAQ were up, but the Dow was down. And we'll have a look at the individual stocks and why that occurred. And then looking at Europe and then Asia, we see most markets down except for India. India was the strong point there. Taking a look at the Dow 30, just by ranking, we see that the worst performer was Boeing, down a further 6%. Remember, they fell 7% the day before. They're down a further 6%. More airlines cancelling the 737-8 flying over their airspace, and that is having an impact on Boeing. So that's one of the major factors that will have dragged the Dow Jones down, because that one stock, whilst it's in the other indices, that one stock in this smaller group of stocks is having a bigger effect on the Dow Jones. We saw that Apple was actually up 1.1%. UnitedHealth were also up. Their trend is still looking good on the long-term chart, although they've really underperformed so far this year. The relative just falling out of bed here. We're down some 13% lower than the market, and we can see that change in the relative is quite worrying. We're seeing that change in the daily chart as well. We had other stocks like Microsoft up 0.7%. They're looking pretty strong. Good upside targets there. And just looking at some of the others here, we had IBM, Intel, all looking much better. So these stocks all looking pretty ripe for recovery, having fallen away at the end of last year, now starting to recover. So we are seeing that US recovery continuing. Looking at the Nasdaq, here we see the performances. If we just rank by performances, we had Align Technology up 3%, and we had American Airlines down 3.5%. Tesla down a further 2.6%. We see on the charts here, Tesla is just falling away and has underperformed the Dow Jones Index this year by around 84%. So we're seeing that it's been quite significant there for Tesla. Looking at the bellwethers, we saw Google were up 1.5%. That chart looking better at all the time. Good upside targets. Amazon hasn't done as well, but is just now entering back into medium-term bullish territory, again with good upside targets. The relative fairly flat over recent months. Facebook bucked the trend yesterday. They were down slightly, so but the chart again continuing to recover. The Aussie market, just having a quick look here, we had Saran Mineral Holdings. They were up 5%. That chart looking pretty spectacular, it has to be said. Really nice, strong trend there. Looking at the other end of the scale, we had Sigma Healthcare. They were down 12%, just really falling away there. Adelaide Brighton Group were down 3.6%. That chart still looking awful, and downside targets, and the relative falling away very strongly. China, we mentioned, was down 1%, so we had a mixed picture here. The worst performer was Sanan Optoelectronics, who've had a strong showing since this rebound in Chinese markets and have crossed into bullish recovery, but they were just falling away a bit last night. Looking at the Nifty 50, you can see the market's still open and the price is coming in live from Yahoo. We see here that this was the strongest market in Asia, up. We had Industry Bank up 4%. That's looking really ripe for recovery now we're through the cloud. We've got good upside targets as well. The relative has underperformed this year against the Dow Jones, but we're seeing that. Yes Bank was a terrible performer last year, but we're really starting to see a recovery in the share price here as well, and we've got upside targets. So looking quite good. We're seeing a lot of these financial stocks in India rising. State Bank of India are up 1.3%, for example. Not enough to make this chart look really bullish, but we are just seeing that it's pushing higher through the cloud. This will be the key level for it to break. Taking a look at the downside in India, we had Vedanta down 3.5%. They're not looking so good, and Indian Oil Corporation also down. So the resource stocks falling, the financial stocks rising, and again we just see the updates coming in there from Yahoo Finance. Taking a look at the European markets now, we start by looking at the FTSE 100, just by ranking by performance. Best performer is Standard Life Aberdeen, up 3.8%, and not enough to really change the chart. Micro Focus, though, is really still pushing ahead and just having gone sideways, just nudging to break out again. And the long-term chart now entering bullish territory as well. Got an upside target here of 67%. Not a lot of clear targets here, and quite a hard chart to read with it when you look at how it's performed over the last year, but it does look like we're seeing recovery. We've outperformed the Dow Jones by 25% this year, so that's quite a lot. TUI we see is also up 1%, although the stock is looking pretty terrible, and they've got quite a big fleet of 737-8, so it'll be interesting to see if that has an impact on their results. Taking a look at the downside, we've got Hillcore Pharmaceuticals down nearly 2%. GVC Holdings down 1.75%, making new lows. That chart really breaking through support there, so we're seeing here a fall away as well. Looking at the FTSE 250, we've got Provident Financial. We're seeing a theme here. The financials looking better over the last few days. Quinty Group down up 2.5%, Playtech up 2.5%. Not enough to change the shape of these charts. If we go on the downside, Avast down 5%. The trend is pretty good on the medium term, but not enough to change the chart. And into properties, we've also see here 2.65% down. On the Euro stocks, the top 50 stocks in Europe, Banco Santander up 1.6%, L'Oreal up 1.6% in Paris. That's a great looking chart. really good upside targets here and just pushing higher all the time. That's stocks like that are pushing the CAC Quant to be the best performer in Europe still. We've got ING looking up over 1% this morning, but not enough really to take this chart into bullish. And then looking at the worst performers, Adidas in Germany down a massive 4.9%. They really have run out of steam. They've been trending fantastically. We've got good uptrends, but this morning that's really taken them lower. Not enough to change the long-term picture yet, and even the relative still looks all right. But we are seeing that there. So interestingly, we still have more stocks up than down, even though the market is fairly flat today. That's it for now. Until tomorrow, happy charting. See you then.